It's a good time to be a property salesman in Yangon. Investors are flocking to Myanmar's real estate sector, drawn by the promise of reforms and good returns on their property buys. Sales director Zormin Tun says his homes and offices are selling like hotcakes.
Normally, we don't have many flats that are left unsold. Within 3 to 4 months since they are finished, they are sold out.
Even though foreigners are not allowed to own property in Myanmar, developer Nyang Lin Taik says buyers from Singapore, China and Korea are snapping up units averaging $125 per square foot. Most do so with local partners for now, ahead of expected changes in Myanmar's property ownership laws.
After this break-in election, the government will give the right to buy apartments for foreigners. So, foreigners are coming in and the value is going up.
The upcoming April elections will be a key test for investor sentiment, and fund director Alexis de Meckenham warns the risks are high.
We see Myanmar as an awakening giant, the last Asian frontier, if you want to call it that way. There is a lot of attention, mostly from Asian countries. Thai and Chinese are all over the place. Right now, it's still not yet possible to invest efficiently in this country. It could be a lot of hot money flowing to the country, too much money, creating kind of an asset bubble, speculation, to a point where prices can crash.
The interest is also hurting some local businesses and pricing out Yangon residents. But the overhaul seems inevitable. Across the river from Yangon, in the town of Tan Lien, another residential project called Star City is taking shape. Star City promises a self-contained community with high-rise condominiums, a school, a mall and a golf course. Even with prices starting at $50,000 for a 640 square foot apartment, the developer says all 300 units in the first 2 buildings were sold within 3 months. Interest remains high, as evident in stacks of local currency brought in by customers to make down payments on their property in what is still essentially a cash-based economy. Arnold Gay, Reuters.